Trading with candlestick patterns is old news, right? Supply and demand, smart money concept, that's the way forward. That's what they want you to think. In fact, I'm going to share with you today a candlestick pattern that I still use when I started back trading with price action on the charts. This candlestick pattern is going to show you where those stop runs are being hit, and you're going to be able to start using this to find highly profitable trades going forward in your own trading. So let's head over straight away and see what this pattern looks like so you can start to see why this pattern is so good to start using. Now the pattern I'm going to be talking about is the pin engulfing pattern. And what I'm going to show you today is exactly how you can find this pattern on your charts, what it looks like, why it happens like it does, and how it's going to help you or benefit you in your trading. Now, if you are looking forward to watching the rest of this video, don't forget to give me a thumbs up right now and share this video if you do find it's great value for somebody else who can actually benefit from this video. So what we're looking at first, let's look at this area first on the left. Now, what this pattern is showing me is a reversal pattern using the pin engulfing pattern. And it's showing me that these stops are being run by those banks before the market is closed down. So we're seeing the market coming up from a bullish trend most likely. We have a push up and we create this high in the market. We want to see a high normally made because it's the best way to find this. Then we're going to find a lower high. This is what creates this swing high. So we have a lower high to the left and a lower high to the right. Now it doesn't have to happen like this. We can have equal highs as well and still see this pattern, and that will work just fine. Now the idea is what we're looking for is we want to see price at this level push back up, take any stops what sit above this level where people have already sold the market here, expecting it to fall, and then we want to see this candle also engulf previous candles. You're looking for the candle to also show you that push up. So what I'm talking about, we want to see a longer upper wick which runs these stops, and then we see a bearish candle forming with a small wick to downside, showing you a engulfing candle with the pin bar at the same time. That's why we call this the pin engulfing pattern. Now the same is when we're looking for that buy. We're looking for that swing to form in the market. Then we want to see that wick to downside, taking the stops, running those stops below that low, then closing back up as a nice bullish candle to show me that engulfing, pin engulfing candle, which engulfs 1, 2, 3, 4 candles. Now, the more candles it engulfs, the more power you will find this candlestick pattern will have. Now, you will see that later in this video when we go through to the charts, how you can actually use this pattern and where you'll see this work in real time. But the idea of the pattern is we're seeing those stops being run. That's where they're going to run those stops and then with a powerful momentum move back in the opposite direction. Now, hopefully you can see why this pin engulfing pattern is in fact the only pattern you need to find success in the market. It's still a pattern that I use today in my smart money concepts. Now, all of that you can learn in the Forex Masterclass course. Now, there's also some basic courses as well for supply and demand on the website. Now, all the links for those, and that is a free course as well. The links for those are in the description of this video. So now that's the pattern we're looking at. Let's now have a look at the price chart. We're on the daily time frame on the EUR/USD. We're going to have a look at some of the previous movements where you can see how this price pattern works in real time. So let's start over here to the left. And straight away, what we can identify here is the market. Let me just grab an arrow. We see this high being placed into the market. We see a swing high, a lower high to the right, a lower high to the left. That creates our swing high. It's here we can also mark a level from that high. Okay, and then we see the market dropping down. We create this lower high, and again we can mark off a level from that lower high. Now notice how, and what I'm going to do, I'm zooming into this area of price because it'll be easy for you to see what happens. We create this lower high, the market then drops, and then we have a push up on this wick to take this high. Now what that's done, that's taken and actually run those stops, and most probably overhead to the left on a lower time frame will be an area of supply. Now that comes into more understanding the supply and demand and smart money concepts. And this video is not about that today. It's about this candlestick pattern, but it all relates to that, especially the way I trade. Now this push up takes those stops, runs those stops, and we see a nice bearish push back down. Now at the same time it does this, we also close this low. Now that is a great candlestick pattern to show me the market will fall. Yes, I know this is in hindsight, and most of you will be looking at this saying, well, you can see that's what happened. But these types of candles will give you the highest probability for an entry. And it's not taking an entry on this candle here. It's actually waiting for this pullback where on a lower time frame you'll be able to capture an entry and start looking for your targets by using what I class as areas of imbalance to be filled. Now that would have been a great entry here, a small stop loss and a nice risk to reward. So it's understanding that the pin engulfing pattern must engulf the previous candles and it must wick through and take those stops. Now you can see this candle actually engulfs 1, 2, 3, 4, 5, 6 candles. That shows you the power that this move has had after it took these stops at these highs. Now this is a reversal pattern we're looking for because we're looking at the high of the move for the market to then head lower. Once you can see that this is what's happening, then you know where you're looking for your trades to go. So let's just go forward and see if we can find a similar thing. Now, we do see the market creating these areas like this in the market where we wick through and we do drop away quite heavily. Now, this is in fact more you can learn inside those courses and even more on this channel. Understanding those manipulations where those stop runs are hit and where the market drops away. Now this is simply a smaller time frame reversal where you could have caught an entry off an area of lower time frame area of say a 1 hour supply and caught that trade all the way down. But that is a different strategy. This is to teach you the basic idea of this candlestick on its own and how it will show you the direction of price. So here we don't have this type of pattern, but if we go forward in the market, you'll eventually find we do have this one here, but the difference is we can mark off from this high. We can see where the market runs those highs, there's stops sitting there, and we have an engulfing candle to the downside. We don't have a very long upper wick, and the other thing is we don't actually close this low like we saw on a previous occasion. So we go back, you'll see where we actually close through this low. So this to me is not such a good setup. Even if you did take this trade and you look for a pullback this area, you could have most probably got out with a risk-free trade, but it's not a setup that looks good. It looks more of an engulfing candle than that pin engulfing. Let's go forward and see if we can find some more. So this is a pin engulfing candle, but look at where this sits. We're looking for this to happen, and this is the important part. We want to see this happen at a swing high like this area here. This is happening at the bottom of the move, so this is the low. So this is going to be easily manipulated and you'd end up having a losing trade. Yes, there isn't a high to the left really for this to take except for the next candle, so that doesn't really come into the entry strategy either. But this type of candle, the low, signals to me a potential reversal back up, and that's what we did get, the reversal back to the upside. Now the market here comes back up into this origin of this move down where we most probably would find a lower time frame and entry, and again that is a different strategy, but you may find on the lower time frames here this type of entry candlestick pattern of that pin engulfing say on a 4 hour or 1 hour time frame. This will work on any time frame, but it does work better on these higher time frames, especially like this daily time frame. Let's continue to go forward. Now we can see where the market creates that reversal. We have this low in the market here, okay, and then we create this wick to downside taking the lows. That is now showing you the market is making that reversal, but this time running the stops to the downside. So there is your reversal right there, and that is your pin engulfing candlestick. Again, we have a lower wick to downside running the stops, and this is a nice bullish engulfing candle closing these two candles. Now we can even identify we have a pullback, okay, on the very next candle. The market pulls back down. This is a level that, in fact, is a reversal strategy that you can see in one of the videos in this channel. And this is when the market pulls back in, where you could have caught an entry here to go to the upside. Now, we'll have a look at this entry at the end of this video. So stay tuned to watch that and you'll see how you can capture a trade on a lower time frame using this type of price pattern, this pin engulfing candlestick on the daily time frame. So now my first target, if I was capturing a trade here, my first target on this one would be here. Okay, that would be my first target, which you can see is here. My second target would then be this level here. Now you can see these targets, they work very well. You can see the market just gets this level and we have a pause, and again we get this level and a reversal. And these levels will work time and time again, and this is part of the money management section inside the masterclass course that I teach how I use all this in my trading. So again, we then have this area here in the market, which I class as a double test low. So this is again another area I would look for that pin engulfing. This is better when we see this, but I would still use these as a valid reversal. Even this one here is still valid as a double low. We do go slightly lower on those two areas, but they will still be valid by looking and understanding the price. We see we create these lows. We have the push down on this nice long lower wick, taking those stops, and then we have a nice engulfing candlestick. We engulf two candles there, and we engulf this candle right there. They signal to me that the market will want to go higher. Now at this point, we just mark those two out so you can see the two candles I'm looking at. These two candles are then pin engulfing. Once we see this candle closing up, again using our reversal strategy, we have a level where we expect market to come back to a lower time frame. It comes back there and we push away. Where would we target? This would be the first target. Second target would then be this high, which we can see the market does run to. Now the same when we see this reversal here, understanding the use of our reversal pattern, which is inside this channel. That video, I will leave this at the end of this video, so keep watching to watch that. And we can see the pullback comes back to this area, test it in a lower time frame. That's my first target, and then my second target is simply this high. Now you can see both those targets are achieved. Once you understand the dynamics and the movement of the market using these patterns, going down to a lower time frame for your entry, you're going to create some high risk reward trades. And talking about the trades themselves, let's now have a look at the lower time frame here on an entry you could have taken to capture these trades. Now we're going to look at the entry when the market pulls back here. This is our level we're going to look at. These are then our two targets. We'll remove this one so we don't get mixed up, and we'll also just remove these levels for now as well. So let's look at this level on a 1 hour time frame. So here we are on the 1 hour time frame. The first thing you can notice, this is our reversal level. This was our manipulation. This is where the stops will run, and you can see here where we have a consolidation area before the move to the upside. We can then witness from this high here in the market, this is your basic break of structure to the upside. This is all common sense in trading, and most of this you already understand. Now we do also have here an area of imbalance where we see the market pulls back down, fills that imbalance, and this is how I would take my entry here and be ready to the upside. Target 1, target 2. Now you can also use right here is an area of demand. So there's an area of demand where the market pushes through, breaks this structure here in the market. So there's a drop, a lower high, a drop through, leaves this little structure area, we break it, we pull back. There's your entry on a 15-minute. So how would you take a trade based off this area? Well, if I was taking a trade based on this area here, simply using that reversal pattern, you can identify right here, there is your reversal entry candlestick, and you can look for an entry after this close here above this high here in the market, which shows you a break of structure, which is going to be more valid. If you was taking that as a trade, a simple entry on that move, stop of the low, you have a first target of a 2 to 1 and a second target of just under 5 to 1. Now, if you was to use this 15-minute entry, we'll go down now and have a look. You'll be able to see how you can increase that risk to reward. When you go back down to 15-minute entry, at this area of demand, you're going to have the same type of profit margins. But when we go down to a 15-minute time frame here, this is where you can start increasing that risk to reward. So we'll pop down to the 15-minute now. So now on that same area of the chart where we see the market pulling back down into the 15-minute. Now what we're looking for here is our entry. Now you can see this nice big momentum push up in the market. Also shows me that reversal pattern. And that is where we can see the market comes back into this area of demand as well, holds, and that candle itself would be an ideal area to take a trade. So if you're taking a trade off the area of demand and you had your stop, let's say below here, below this zone here, and this would be your first target, which is nearly a 4-to-1, which is nearly what the second target was using that larger zone, and your final target is a over 9-to-1. Now if you're using the candlestick itself as your entry, let's move this down. Let's grab this, and this would be your stop loss. You can see now your first target would in fact be nearly 3-to-1 and your second target is 7-to-1. So even using a candlestick pattern for your entry like that would still give you a great risk to reward, understanding the movement of price, where we can see price break structure once again. Just bring that up, we break this structure here. So we drop down for the last time, we break this area here of structure in the market. Change that to a break of structure. We then create this area of demand, where the market comes back, retest it, we continue to break structure once again. It's reading the charts like this, which is going to help you to see the flow of price. We come back into this demand once again. We do go deep into that demand zone, but we hold and then we rally away. Now you could even use this first test and use this demand zone, which would be absolutely a great trade to taking, because you would have gone off this area of demand, stop at the low of the zone. This is going to increase your risk to reward to nearly a 15-to-1. So you can see how you can actually use this with that pin engulfing candlestick on the daily time frame going down to lower time frames. So all of this, understanding the qualifying of zones, you can learn inside that Forex Masterclass course. This is something that I do teach and go through to help students to understand why this works and why this actually helps you to find higher probability trades using this. Now the actual candlestick pattern we've gone through today, the pin engulfing candle, is going to show you that manipulation phase where we can see here in the market we do pull through and continue back up. It's a one candle pattern that is going to give you the confidence to start finding higher probability trades. Now if there's anything in this video you've not been sure of, then leave a comment below and let me know. But popping up right now is the video I said about understanding the reversal in the market. That strategy was going to help you to pinpoint those reversal points in the market. That's a great watch, so make sure you watch that next.